Oh, Disney hasn't had earnings yet. It's on the 7th. So Disney is this week. Disney's on Wednesday. Disney is Fed Day. And it's always good to have earnings on the Fed Day. But at least it's after the bell. Maybe it's before the bell. Is it before the bell or after the bell? Oh, it's before market too. Dang, yo. Before Fed Day. Yikes. Okay, chat. Let's get going. Let's do, we'll keep trades viz up just in case I want to pop back in there, but we'll go ahead and go through month in review. Oh wait, let me get my schedule up, the agenda. Never attend a meeting without an agenda. You get a job, like, is there an agenda this meeting? And they say no, and you say peace. Like, that's what that I wish I was brave enough to actually kind of follow through with that, but like that's kind of my sentiment. Like, you want to have some meeting with no agenda? Like, well, I'm not in that meeting. So we'll take a look at our agenda. Those lights, like they're GE lights that I got from like Amazon or something. Wait, maybe I can make them change color. And here's the noises. I wish it heard the oh, it'll change when I talk. Yeah. That'll be fun. Does it have to be green though? Can I guess they're changing. They're changing based on the talking. Yeah, let's do that. Disco light show. Okay. So yeah, no. We gotta add to this though. So market and review, but we're also doing month in review, so that's like up here. And then we'll go through the index levels and the best and worst. We'll go through the trades too. We might do this a little bit out of order, so we're gonna do probably the performance first and takeaways, and then we'll go in market and review. Oh, big earnings are done. Small earnings coming up. There's still a lot of earnings though, so we'll take a look at that, and then we'll look at the goals and some overall ideas. I think what did I say the market started going up around here, so around April 14th. So it's been up for about 3 weeks now. So the market's been up for about 3 weeks. That's good. Let's see here. So now we're into here. Now we need to do month in review. Let's get to it. So this is April. This will be April. So the goals, and I'll add to this because I'm still not like writing everything down. Why? I don't know. That discipline, lack of discipline right there is not good. I wonder if there's a way I could get the screen on the top for the streaming. I wonder if there's a way to do that. I don't know. We'll figure that out. So I didn't really trade crude. I should have. Just shorted crude. Because, man, when he said, why did I chicken out? Trump's like, I want the price lower. And I did short it. I shorted it initially. It was like 75. It was like 75, and I didn't stick with it. And now it's $20 lower. That's... So let's see. So every dollar is $100. So 20 times $2,000 for one contract. trend is your friend, everybody, and you should, you know, the thing is too is like when Trump says something, it tends to happen. So you kind of have to take him quite literally when he says things. Like, he will do that thing. Like, you think it's crazy, but he will do the thing. He will do the thing that he says he's gonna do. The consequences we can't control, but he will do the things that he says he's gonna do. He will do them. So anyway, I should have traded crude, but I didn't. I did do the calls on IBIT. I haven't really wheeled TQQQ. I bought the shares on Friday because it was going up and it was positive news and the market was going up and all that noise. Made money on that trade so far, but I don't know if that was just kind of a trap. Because, to be honest, nothing's fundamentally changed. Yeah, earnings are a little better, but that reflects data that's old. People front ran, inventories, and some people bought stuff. I didn't look at the last... There's some report that came out last week. I think the thing that we front ran was buying cars. As consumers, but... Other than that, like, if this tariff stuff doesn't get taken care of, stuff's going to get more expensive and stuff's going to become unavailable. And that's going to be a problem. So, I mean, not that we need all the stuff that we've been buying from China, but it's like, then it also goes to, this is a whole nother thing, which I have to get off this little soapbox, but it's like, who gets to decide that? Who gets to decide what you get to buy? I kind of thought about that the other day. Oh, and then that part of the agenda is we got to read. I got to put that in there. Let me put that into today's. So news and interesting too. We'll read the Warren Buffett letter. I didn't read it yesterday because I was like, I just want to read it on stream. Even though it's a day late, I'm sure you already all have watched or read the letter already. It's his last one, I think, though. This might be his last letter. I mean, he said he's gonna pass the buck to his Greg Abel dude. Man, someone taking over the reins, yo. And Berkshire Hathaway. Is he gonna be as good as Warren? I mean, he was trained. Warren Buffett was his I don't know if it was his mentor or just someone he looked up to. I don't know how close he was to that Graham guy. And then, Warren had it for 60 years or whatever, however long he ran Berkshire Hathaway. And now he's going to pass it over to some other guy. The guy he's passing it over to is about 60 years old, which isn't, that's not super old, but like, I don't know that this guy is as healthy as or has like the genes that Warren Buffett's 94 years old. Is he in the same health condition? Like, I don't think Warren Buffett has, I don't know what his medical conditions might be, but he's not like super fat. He's not overweight. He's not, he's still kicking. 94. So he must be in somewhat good health. Is the other guy gonna make that long? I don't know. Does it matter? I don't know. I think they have to maintain it though. Like they have to. Man, Duolingo. Man, I missed out on Duolingo. Anyway, mine's kind of rolling around there, but yeah, we'll read the Warren Buffett letter. We add that to the agenda today. Let's get back into it. We need to get back into April goals, and I'll add to this. Looking for the right risk reward. Could have done crude. Knowing that for my futures trades, and this still holds pretty true, like I can't really lose more than 150 bucks. Like the stops have to be super tight on futures day trades. And I've come to the rule that I could be short. So if I need to be short, and it's so hard to hold on to. Anyway, I could be short, directly short Sunday when futures open till like Friday at night. so I could do that. Still messing with TQQQ. I should have sold puts, but I bought the shares. Sold the call. We'll see how that works out. I need to write everything down. And I'm still working on this. More news, like reading things, not listening to things. Because the stuff that you're listening to be honest, like even if it's like a news source, quote, news source, anything that's like talking is usually an opinion. It's not facts. It's commentary. It's commentary and opinions. And you listen to that too much, it skews your bias. Like, the reading is really the powerful stuff. Like, if you're reading books on this or that, like, that is better. It's not as, like, in your face right on time, but it's better. If you're trying to learn something or you're trying to understand something, generally videos aren't really where you want to go, like to get your market opinion. You know, this whole talk about recession, like maybe it's real, but like I think so. I've been trading for what, 3-4 years now. It's like every year there's going to be a recession. Every year. The year the market went down, I don't even think there was a recession in the real economy. In 2021 or whatever it was, 2022, when the market was down like 30%. Never had a recession. I think there was like rolling recession, so like each sector kind of had like a downturn. It didn't happen all at once. So I don't know what a recession what it's gonna look like. I know higher prices don't help anything. It is, people will just stop. It'll be one of those things where people just stop spending. They'd be like, y'all, prices are too high. We can't buy it. So I don't know. I don't believe the recession talk as much. Because one, the way that they determine a recession is after the fact. So even if you're in a recession, you won't know until it's over by the way that they measure it. So whatever. The whole recession talk, I think a lot of it's just like, you know, people having their opinions, and it's, I mean, I don't know. I think it's different than 2008 too, because like there's way more rich people now. Like there's so much more money out there. And the people that are buffered from things like any recession, there's more of those people. So like there's always going to be some economy that's humming and going. And if you could tap into that, that's key. I think it's going to be harder. I think that's the other thing, the end result of this is that because there's so much more money out there, because there's so much more rich people, there's a lot more competition. And so to be at the next level is going to take a lot more work, and it's going to take a lot more money. Because the competition has gotten harder. Like, you know, everybody wants that same little gizmo. Well, it's going to cost more. It's going to cost more because it costs more to make, costs more to ship, costs more to buy. Because more people want it. And the marketing kind of has to say, you know, made in America or whatever, you know. Yeah, I don't know. That part of it, I think you can only like focus on a small part of it. Can't think about the whole thing. I think even the smartest people that talk about and know about these things, like they don't focus on everything. Like they focus on like a small component of whatever we consider the economy. Oh, not everything. And like in my mind, I feel and see everything, and that's not how you have to deal with that stuff. Anyway, back to my goals. So that was still going into the follow more news, read more news, and not listen to it so much. Still haven't figured out a good cadence on this. I to like restart every month, but one we'll figure something out around that. I don't think it's necessary. Because I could take the trades from each month. It's not that, you know, you could isolate your trades in your notebook, so it's not as important. But here's the performance for the month. At least for the trading, I'm up. I think overall, very, very close to being even. Because I hold the long positions, so like that offsets some of this. So I'm about 1,700 away from being totally even. Oh man, that's like one good futures trade, yo. That's what this month was actually on Liberation Day. Liberation Day was actually it was pretty good for me. Like it worked out pretty well. I'm like, I knew it was gonna be big, and I knew it was gonna be big news. And I think, you know, people thought that they had it priced in, you know, 10% this, blah blah. I was just really going off the price action, to be honest. Like I was like, you know, I was just going off the price action. I'd set my levels, I had some things marked, and it plummeted down. I'm like, gotta get in on this because it's gonna keep going down. Also, you know, I watched it. I didn't watch it with sound, interestingly enough. I was on my phone because I had like this car emergency, and I was like, but I knew I had to trade. I knew I had to watch this because it was important. Like, this was new economic puzzle piece being put into the game, and a new character in the video game. So you had to watch out who it was going to be. And I think the moment I knew this was bad was when they brought out that cardboard chart. I'm like, those are never good. And then the price initially went up, and then it started to plummet. And I didn't really know why. I didn't know. I knew that board was bad. I saw high numbers, and then some of the headlines started coming out about, like, you know, this high inflation or high tariff on Vietnam. Like, Vietnam, that's where we get all our clothes from. Like, you look on any bag, any of your clothes you buy, it's gonna say Vietnam, Thailand, Bangladesh. You know, those are your best clothing makers. They've been doing it for a long time. Like, China's been manufacturing for a long time, all of our stuff. They've been making clothes in that part of the world for very long. Like, they know what they're doing over there. They have the infrastructure, the people, the training, all the things to make sure that people all around the world got clothes. And when you see those numbers, and knowing that, like, our stuff comes from there, like, no matter what I try to do, I always end up at Old Navy. That's where Old Navy gets their clothes from. With tariffs that high, yikes, you know. And I know there's like other things, you know, like talk about wages and this and that, blah blah blah. Like, just like from a standpoint of like, where do I get my stuff? That's where I got it. So I knew that was bad. So yeah, I shorted that day, and I think I stayed in until Friday. I held that thing for like 2 days, day and a half, something like that. That was pretty good for me. And that was an excellent trade. That made the whole month. And I had one other big day here. I am getting myself out of a hole, though. I put that little caveat on there. I'm digging myself out of a hole, but pretty cool. Like this right here, this is what you need to see, you know, like you want to see, can make this picture bigger. Like, you want to, this is how I need to be doing it. Like, you know, $8,000 win, only $2,000 loss, like that, or even smaller, like make it $1,000. You know, make it $1,000, yo. But yeah, it's a pretty decent month. We need to keep growing the account, though. We need to get it to even. And just get these numbers lower, you know? Just get them lower. Just get those losing trades lower. Big wins were... I'm still trading the M&Qs, so... I'm trading them with VWAP. I was doing trend lines for a while, but I find that those are a little bit more reliable. I have to label them though. That's the other thing I need to work on with my goals. I gotta put that in my goals, is having a defined... I have way too many tags right now. So like, it's hard to know exactly what's... Like, you want to pinpoint exactly what's working and what's not working. I don't think with my current tags I do that. So I want to get... So like the trendline trades, I want to try and test those as support and resistance for the indices. I think for commodities, they behave a little bit differently. For the indices, from what I'm seeing, the trend line trade is about 50% trade for me. 50%, you know, win or lose is 50-50. But it also seems that when it hits a trend line, like if it's a lower trend line, it's going to bounce. If it hits the upper one, it's going to come back down. So it's for support and resistance. It's not... Can't buy the breakout or sell the breakout. And often you're too late at that point. So that's what I'm finding with like the NQ, is that if I use the trend line, it's 50-50, and it often just goes in the other direction. So I've been trying VWAP on the intraday I've kind of gotten back down to the 5-minute, especially if there's a big bar. So it's between the 5 and the 15-minute. I like the 15-minute more because you have to wait a little bit longer on the day time frame. I'd really like to be on the hour time frame, but I can't handle the swings. Can't handle the swings yet. I think that also comes down to like, what strategy are you using to keep you in that trade for that amount of time? Oh, what's going on with my nose, chat? What's going on, chat? Ugh, I ate too much for breakfast too. Oh, everybody heard that. Turn the volume up on that. $13 wins, 9 losses, super profitable trade. TLT. You know, but I should have just kept that in my Palantir. Should just kept them. Anyways. Yeah, here's the outlook. Here's everything. This is one good trade. I mean, I don't know if I could have taken larger size on that. I wasn't in the most ideal situation. I think I might have done 2. And then I got rid of one real quick, and then I just kept the other one on. I think I got up to like $1,000. I'm like, okay, we'll just leave the other one on. I think that's what I did. I think I did actually use 2. Like, these aren't allowed. I can't do the... I gotta get rid of these. I'm still running covered calls. Here's the days of the week. Wins versus losses. A lot more wins. Futures were the big win this year, this month. This is the full account. Still down more than the market, so I need to fix that. But really, it's one good trade, so it's like sticking to your system and following through. I mean, that was one big day too. Like that was something pretty unique. Like, we have a Fed meeting coming up, but those could be... I mean, if the Fed cuts in May, like, it's not baked in. So anything, I don't know what that would do to the market. I don't know if that would be good or bad. because there's no expectation for a cut, but if they do cut, I think there's a lot more explaining to do if they cut, but I don't know. But then if they do cut, then it seems like they're not independent, and I think that's also an issue for the Fed. So I think I'll play it cautiously. And the move is always with the press conference. It's never, you never want to take the initial move. You want to wait till the press conference and he starts talking. And see if there's follow through in whatever move was made. And often anything that's done anyway is usually undone the next day or Friday. So it's really a short-term situation. I think I'll take it as it comes. Probably try to play VWAP. And see what it does. Wonder what'll happen though. Like if the market tanks, they'll be like, oh, you need to cut rates now. That one's kind of hard to think about right now. I can't really. I think my only thing is volatility is down from where it was because it was at 40. It's not at its historic average yet. It's still high. It's still elevated, but not as bad as it was. I'd want to protect myself to some extent if it goes back up. So I may buy a put. Buy a put on Monday, see what it does on Wednesday. If I'm out, then I'm out, but maybe a couple $100 I could trade around it. That'll be my thing. Anyway, focus on this big win. It's all you needed. So focusing on just the stocks and options. That is here. I think I had an Amazon trade too that was big. The covered call. Yeah, push this up. Keep pushing this up. Like push this up to $3-4 grand, and then you're only losing $1 grand. Like that's what you need there. About $100 a day. That's what I want. I'm kind of in a place now where my goal was to do about $100 a day, and I can either pull that off from a futures contract or just the portfolio. So we're getting there, chat. Been playing TQQQ. Shouldn't have taken that hit on TLT, but it's all chill because they will cut. They will cut. Just when? When are they gonna cut? We don't know when. Thursdays are good days. Tuesdays, Thursdays. I see you. Okay. These are my verticals, the call spreads, the short puts. Yes, I need to do more short puts. These are the tickers. So Amazon. And PLTR though, I should have stayed. I did a put vertical, and it would have gone into it. It wouldn't have been easy to hold on to that trade. I should have held on to it. Anyway, I don't know why I'm trading this. So warning, I think I'm trading it because I'm familiar with it, but right now the spreads on the options are so bad. I don't recommend this one. It's kind of that balance. Like, if you want to sell options, you kind of need to do it on products that are a little bit more expensive, so that you get and sector leaders, so that the options are liquid enough, and you get enough premium, and you get enough premium. Like with this one, they're not liquid enough. And the premium isn't high enough. Like, I need to go bigger. Same thing with this one. Low price it's fine because it's a bank and I need bank exposure, but we need to find better things for that. And then these are kind of bags. And I shouldn't have taken a loss there, but it's all good. Futures. This is my one futures trade. Basically, it took me through. The rest I've just been screwing around. You can kind of see it. It's still kind of steadily going up. So we'll focus on the NASDAQ and we'll keep trading that. Yeah, see, this is what you want to see, yo. See. No, trade less, make more. Like, push these to the limit. My goal, though, is to take 2 contracts, not just 1. I gotta take 2. That was that Trump trade right there. Yeah, I think this is, I took the first one off and then I let it ride. And I took it off on Friday. Because again, I could be short from Sunday to Friday. Those are the rules. It kind of skews this. These are like only 50% trades, really. This one I just got kind of lucky with. This one I don't want any more of these. But technically they can work. Alright, distinct set of tags, that's what we're working for this month. We still want that 1 to 2 risk ratio, so we gotta look at that when we put the trade on. Like, can I get that? Can I get, if I'm gonna risk 150, can I get 300 bucks? Is that possible? That's what we need to look at. Still more reading and less video, which we'll see if I can do that. We have to kind of make a better goal and a plan and a system for that. Because you start filling yourself with like too many viewpoints and too many this and that. Like, I need to just pick, like, I do need news, but I need to be able to trust it. And I look and listen to maybe 2 sources. Otherwise, it's too much. It's just too much. Alright, so that's for May. We gotta come back and revisit those. But, you know, I took a chance, took some risk on a day that I knew I had to, and it paid off. And I think that's important. So you gotta keep with your strategy, you know, whatever that is, and you find your opportunities and you play them. Had I been in a better like I only had my phone that day, I probably would have only taken 2 contracts. I don't think I would have taken more than that. Would have been nice to take 3 maybe, but we'll just keep working at it. And then the trades for the week, we could go back to that. So last 7 days, eked out a profit there. Traded TQQQ, I still have 1 on. Futures trade on the 28th of Monday. Now and then I should have re-entered, like when it came up here, re-enter, came up here, re-enter, and then this. The 19 went down 300 points. That's $600, you know. So you're never gonna catch the whole move, but you need to catch more of it. That's for sure. But that was that trade. This is just rolling a call. Long, but couldn't hold on to it. Missed out on some gains there. This was, I think, a put spread. Actually didn't have to worry about those big jumps down. Usually they fill it back up. There's usually a chance to fill the gap. This is a short position. The put? Shares? Yeah, shares, okay. Just fucking around with shares, okay. This is rolling this call. I think it was after earnings for Skechers, because they had... Earnings were good, the guidance was bad. This one I didn't record. Bad. Going short wasn't the best idea, so... Oh, this is my current call spread. Yeah. I think I took one off just to take off some risk. Because the market is kind of going up, but I have it until June. So... Like, if we don't get a trade deal and we don't have these things in place or something happens on Fed Day, I do have some negative deltas. So that's a good thing. That's a good thing. Oh yeah, we don't have the emotes in here. Let's go. Wilsif Runty. Let's go. Go to disco beats. Let's go. Woo! Let's go. Runtman emote. I love it. It's the best emote, man. Alright, so those are the trades. I went through the month. You know, just focus on one good trade. You know, what's that A+ setup? So for me, it's like, you know, on a day trade, it's going to be you're above previous session close, you're above VWAP, and you're in an uptrend, you're making new highs and higher lows. Like, that's what you want to see. You know, if it's the downside, those are a little bit more tricky because I feel like any moment just someone starts buying and then it's like, then you're in a short squeeze and it's like, ugh. Short squeezes are like intense. They're not slow. Like, man, they just, they say what, face rippers. That's what they are. So you have to be so careful with going short. Or have like a big risk tolerance. Like, that's the other thing with shorts is you have a monster risk tolerance. Oh yeah, that's the last 7 days. Okay. And yeah, we're into May now, so I need to even update my charts and stuff like for the May day trading, so I'll have to do that too. But let's go ahead and go into the markets that were. Alright, last 5 days. So last 5 days we are up, and that's 3 weeks now, 4 weeks. What are we at now? So 1, 2, 3. This is the 4th week up. So 4th good week in the market. Go ahead and take a little snappy shot of that. Okay. So we're up there. Let's go ahead and take a look at our sectors. Who's performing? I might have to be right back, chat. I gotta take a quick break. I'll be right back. Alright, we're back. We're back, chat. Should have got something to drink when I was out there. It's okay. In case you're wondering, the cat is my cat. Oh man. He's my kitty. Anyway, let's go. 5 days. Who's on top? Industrials. KRE. XLK. XLF. Real estate. Yeah, and that's supposed to be something else that's supposed to benefit from cut rates is real estate. Real estate. Chips. Communications. Meta. Google. SPY. Who's down? Gold's down. Y'all down with call spread on gold? I'm kind of thinking about that. But that's also kind of a risky. Maybe not until after the Fed meeting. Might wait till after that. But we'll see. So really the same names. I mean, honestly, like XLF, XLC, those have been in the top for a very long time. Gold's still up. So the 3-month, the gold's still higher. XLP, XLU. They're kind of defensive. Yeah. So these defensive financials, I need to get maybe some more of that financial exposure. I think that's definitely something in the books. Kind of thinking about a put spread on Google. I don't know where they are in their court case, their antitrust lawsuit, and then Meta also has a lawsuit going on right now. I want to put maybe for... That's mostly to play vol expansion on the Fed meeting. But we'll see. So going back to the 5-day, just thinking about the 5-day. We have industrials up, banks up, regional banks, tech, financials, real estate, chips, communications, biotech, I think that's biotech, SPY, IWB, Russell, that's the Russell ETF. So everything's, you know, kind of having a good day, but just keeping in mind that the things that are still performing over the 6-month period are defensive. They're still defensive. Gold is still up 20%. Even with this little bit of a drawdown. So I think cautiously bullish is going to be... Should just put that in the title of the stream. I think that sums up what we're doing today. Is we are cautiously bullish. Can I spell cautiously? Gosh, I don't know how to spell so I have a caution. Bullish. I spelled it. I think I spelled it, chat. Spelling is not... You know, it's funny though, the whole thing about it though is like, you know, in school, I always did spelling tests and always did really well on those things. And like, we learned grammar. We learned it from those little books or whatever, but it didn't stick. I don't know why it didn't stick. It just didn't. Maybe it's because it was just those exercises and we weren't actually like, we weren't like looking back at our own writing. So like, I think the way to learn it is, yeah, I use little workbooks and the examples, but then like, you need to go write something where you're using that. So like, and then you have to have people read it and see if you're using it in the right way. Oh, look at that. Anyway, cautiously bullish. There we go. We've updated it. We've updated the title, chat. All right, those are our sectors. So let's go to, we didn't take a picture of it though, so let's go ahead and do that. All right, let's go ahead and go to stock analysis. Gainers for the week. I saw this on Friday. We keep an eye on that for got some biotech names. J Bio, Kids. I might keep those in the list for some. Let's see how they look. Is this by market cap? Yeah. So our big boys. Big boys. Yeah, pretty much all the big boys. Big boys are up. That's only the top 8. Top 10. 10, okay. Let me add. You know, I don't have a position. I'm gonna keep gold on there though. Make Amazon. This should be, I mean, Walmart, I have a position. I can keep that there. Crude's okay. Change this one to kids. This GE again. I don't know why I screwed that one up. Well, the options for GE are hard. That's the one thing I think that keeps me away from GE is like price is a little high and the options are a little spready. So I don't really like that combination. Losers for the week. Market cap. Huh. Yikes. Apple's like really struggling. I don't know what to think about that. I think it's because they're so known for innovation. Like something like Microsoft is not particularly known for their innovation. They're known kind of for their steadfastness and stuff like that. So like Apple, if it's not innovating and it's not keeping up, then it's gonna lose. This isn't great to see all this though. Maybe there's a rotation out of these things. Maybe that's what's going on. I don't know. But maybe there's a caution about a rotation. So those, you know, those staple names. Or maybe it's just a pullback. I mean, we always call like, oh yeah, Meta's just in a pullback or this or that, you know. It's not like that. Let's go ahead and put the goals here though for my takeaways. Put this in multiple places. Whoa, scared me. No, no, it works pretty well. There you go. Pretty good. So where do we need to be looking for trades, chat? Oh yeah. So we need to be looking for trades again. Financials. Well, we have the what do we have on right now? That's a good question. Let's take a look at what I actually have on. What do we already have exposure to? So I'm long TQQQ, which I'd like to stay that way, but I've also been winning playing hot potato. So I might just continue playing hot potato. I bet I have a covered strangle. We'll just keep taking off whatever side's profitable. Walmart is in the money, so that might just let that do its thing. Nothing you can do there. KeyBank is in the money. Please take that bag away. Just please take the bags away. Small profit. Take the bags. Let them go. Tiva was the wrong healthcare play. Why didn't I just keep Hims? Like, they have the weight loss drugs. Fucking Novo Nordisk. Like, before they're like, oh no, you can't sell them. And now they're gonna sell them cheaper. Anyway. I have my Q call spread, which is not in the money. I'll consider doing something. I guess if it goes in the money, I can get rid of something. But I kind of want something on for the Fed meeting. You know, other than just a put. If the market goes down, like, this will be great. But it could blow through it. So that's the other risk with that one. I don't know that I want to do anything. It says 47 days. Like, why don't I just mess with it at 21 days? Wherever it is at 21 days, I'll do what I need to do at 21 days. I think that's the strategy there. Amazon, not in the money. The call isn't really working just yet. I think you just sit tight on Amazon. We'll just sit tight on Amazon. That's all we're gonna do there. I should have just sold the put on TQQQ because it uses... You'd use some buying power, but you don't use your cash. When you buy shares, you use your cash. So... that's just something to consider, but I think it'll be fine. So I kind of have positive and negative exposure, a lot more positive exposure than negative exposure. Kind of should be delta neutral, but I think my positions need to be, I have like different positions, like, or maybe just offset like some of my big ones. Like I need to get like negative 60 deltas somewhere, you know, like this IBIT position. If that was negative 60 deltas and you have a positive 60 deltas, that's better. Like trying to offset your positions. That's what I need to do. Yeah. Anyway, but I think I would like maybe a put for the Fed meeting. I'll probably play the Fed meeting, but that's not as easy as said than done. We already know they're not going to cut. It's all about that press conference. So you have to wait to trade until the press conference starts. So that'll be, I think for me, that ends up being around, what is it? Starts at like 10:30. That's when the announcement comes out, and then the meeting's at 11. So at 11 o'clock. I have to start watching. Or is it 11 and then 11:30? 11:30 meeting. So sometime between 10:30 and 11:30 that day. I have to be kind of locked in on Wednesday. Also knowing that you probably don't have to trade until then. Like it's gonna be sideways until that time. So there's really nothing to do on Wednesday until the Fed meeting, and after, that's when you have to save your energy for. So don't use too much juice Monday, Tuesday, maybe just practice, get your feet wet. Wednesday, you wait till the Fed, see what happens, then you adjust your positions, and you know, I'd put in orders to get out of things, maybe get into things. We'll see what happens on Wednesday. And then after that, you could start strategizing again and kind of what direction you'd like to see things go. They are going to cut rates. So I'm disappointed in the activity of TLT. I'm very like disappointed that it's not just, I guess basically not just going up. Like, it's not hovering around like 90. You know, it wants to go all the way down to like 85 and 75. Like, what are you doing? You're gonna cut rates. Like, what's this noise? Like, I guess that's all it is really noise. It's like, they're gonna cut rates. There's no way around it. So maybe revisiting TLT. That might be something else to think about too. But I do want to look for trades because, again, XLF is, you know, that's been on the top of the list consistently. XLC, top of the list consistently. So you might look, still the same things, you know, that you're looking for trades. Gold might just be a dip to buy. There's still a lot of uncertainty, you know. So right in here, I mean, this is where we're centered. So the two things that are the same on each time frame are XLP and XLC and XLF. So we'll look for trades there. We'll go back to that in a little bit. So let's maybe do new trade ideas. So we need to look at top XLF, XLC. I think I'm gonna do this in another order. We're gonna get the letter up first. I'm gonna read that. So let me go and grab that. I think this is it. Let's go ahead and read the Warren Buffett letter a little bit here. There we go. All right, to the shareholders of Berkshire Hathaway Inc. This letter comes to you as part of Berkshire's annual report. As a public company, we are required to periodically tell you many specific facts and figures. Report, however, implies a greater responsibility. In addition to the mandated data, we believe we owe you an additional commentary about what you own and how we think. Our goal is to communicate with you in a manner that we would wish you to use if our positions were reversed. That is, if you were Berkshire's CEO, while I and my family were passive investors trusting you with our savings. This approach leads us to an annual recitation of both good and bad developments at the many businesses you indirectly own through your Berkshire Hathaway Berkshire shares. When discussing problems at specific subsidiaries, we do, however, try to follow the advice Tim Murphy gave to me 60 years ago. Praise by name, criticized by category. Mistakes. Yes, we make them at Berkshire. Sometimes I've made mistakes in assessing the future and economics of a business I've purchased for Berkshire. Each a case of capital allocation gone wrong, which happens with both judgments about That happens with both judgments about marketable equities. We view these as partial ownership of businesses and 100% acquisition of companies. At other times, we've made mistakes when assessing the abilities or fidelities of the manager Berkshire is hiring. The fidelity disappointments can hurt beyond their financial impact, a pain that can approach that of a failed marriage. A decent batting average in personnel decisions is all that can be hoped for. The cardinal sin is delaying the correction of a mistake, or what Charlie Munger called thumb sucking. Problems he would tell me cannot be wished away. They require action, however uncomfortable that may be. During the 2019 to 23 period, I have used the words mistake or error 16 times in my letters to you. Many other huge companies have never used either word over that span. Amazon, I should acknowledge, made some brutally candid observations in its 2021 letter. Elsewhere, it has generally been happy talk and pictures. I've also been a director of large public companies at which mistake or wrong were forbidden words at board meetings or analyst calls. That taboo implying managerial perfection always made me nervous, though at times there could be legal issues that make limited discussion advisable. We live in a very litigious society. At 94, it won't be long before Greg Abel replaces me as CEO and will be writing the annual letters. Greg shares the Berkshire creed that a report is what a Berkshire CEO annually owes to owners. And he also understands that if you start fooling your shareholders, you will soon believe your own baloney and be fooling yourself as well. Peter Leigel, one of a kind. Let me pause to tell you the remarkable story of Peter Leigel, a man known to most Berkshire shareholders, but one who contributed many billions of their own aggregate wealth. He died in November, still working at 80. I first heard of Forest River, the Indiana company Pete founded and managed, on June 21, 2005. On that day, I received a letter from an intermediary detailing relevant data about the company, a recreational vehicle manufacturer. The writer said that Pete, the 100% owner of Forest River, specifically wanted to sell to Berkshire. He also told me that the price that Pete expected to receive. I like this no-nonsense approach. I did some checking with RV dealers, like what I learned and arranged. I liked what I learned and arranged it in June 28th meeting in Omaha. He brought along his wife Sharon and daughter Lisa. When we met, Pete assured me that he wanted to keep running the business, but would feel more comfortable if he could assure financial security for his family. Pete next mentioned that he owned some real estate that was leased to Forest River and had not been covered in the June 21 letter. Within a few minutes, we arrived at a price for those assets, as I expressed no need for appraisal by Berkshire, but would simply accept his valuation. Then we arrived at the other point that needed clarity. I asked Pete what his compensation should be, adding that whatever he said I would accept. That this, I should add, is not an approach I recommend for general use. Pete paused as his wife, daughter, and I leaned forward. Then he surprised us. Well, I looked at Berkshire's proxy statement and I wouldn't want to make more than my boss. So pay me $100,000 a year. After I picked myself up off the floor, Pete added, but we could earn X. He named a number this year, and I would like an annual bonus of 10% of any earnings above what the company is now delivering. I replied, okay, Pete, but if Forest River makes any significant acquisitions, we will make an appropriate adjustment to the additional capital thus employed. I didn't define appropriate or significant, but those vague terms never caused a problem. The four of us then went to dinner at Omaha's Happy Hollow Club and lived happily ever after. During the next 19 years, Pete shot the lights out. No competitor came close to his performance. Every company doesn't have an easy to understand business, and there are very few owners or managers like Pete. And of course, I expect to make my share of mistakes about the businesses Berkshire buys and sometimes err on evaluating the sort of person with whom I'm dealing. But I've always had many pleasant surprises in both the potential of the business as well as the ability and fidelity of the manager. And our experience is that a single winning decision can make a breathtaking difference over time. Think Geico as a business decision, Ajit Jain as a managerial decision, and my luck in finding Charlie Munger as one-of-a-kind partner, personal advisor, and steadfast friend. Mistakes fade, winners can blossom forever. I like that. One further point in our CEO selections, I never look at where a candidate has gone to school. Never. Of course, there are some great managers who attended the most famous schools, but there are plenty, such as Pete, who may have benefited by attending a less prestigious institution or even not bothering to finish school. Look at my friend Bill Gates, who decided that it was far more important to get underway in an exploding industry that would change the world than it was to stick around for a parchment that he could hang on the wall. Not long ago, I met by phone Jessica Tonkel, whose step-grandfather, Ben Rosner, long ago ran a business for Charlie and me. Ben was a retailing genius. In preparing for this report, I checked with Jessica to confirm Ben's schooling, which I remembered was limited. Jessica's reply, Ben never went past 6th grade. I was lucky enough to get an education at 3 fine universities, and I avidly believe in lifelong learning. I've observed, however, that a very large portion of business talent is innate with nature swamping nurture. Peter Leigel was a natural. Last year's performance. In 2024, Berkshire did better than I expected, though 58% of our 189 operating businesses reported a decline in earnings. We were aided by a predictable large gain in our investment income as Treasury bill yields improved, and we substantially increased our holding of these highly liquid short-term securities. Our insurance business also delivered a major increase in earnings, led by the performance of Geico. In 5 years, Todd Combs has reshaped Geico in a major way, increasing efficiency and bringing underwriting practices up to date. Geico was a long-held gem that needed major repolishing, and Todd has worked tirelessly to get the job done. Though not yet complete, the 2024 improvement was spectacular. In general, property casualty insurance pricing strengthened during 2024, reflecting the major increase in damage from consecutive storms. Climate change may have been announcing its arrival. However, no monster event occurred during 2024. Someday, any day, a truly staggering insurance loss will occur, and there's no guarantee that there will be any one per annum. I don't know, that's a bit ominous. At least he recognizes climate change. Oh no! You got the greens. Okay, because I'm in the... Why does it show that? Does it look like that in the YouTube stream? What does it look like in the chat? We got Jeeves Stobbs in the chat. YouTube. There we go. The YouTube chat looks good. But my multi-stream and Twitch chat, it just says green smiley face, green blue face. We got Jeeves Stobbs in the chat. Let's go. Alright, we're still reading the letter, everybody. The property casualty business is so central to Berkshire that it warrants a further discussion that appears later in this letter. Berkshire's railroad and utility operations, our 2 largest businesses outside of insurance, improve their aggregate earnings. Both, however, have much left to accomplish. Late in the year, we increased our ownership of the utility operation from about 90. Woohoo! Just sub. Let's go. Is that 51? Is that 51 months? Nice. The sounds work too. Yeah, let's go. We need the, what is that? The alert box. Move that up a little bit. The alert box. Let's go. I wish it played it in the chat. I thought Twitch used to do that. Yeah, let's go. We got the Wills of Rage. Let's go. Get those Runtman emotes going. Wills of Rage. I think Wills of Rage is pretty good too. That's a pretty good emote. That's pretty good. Oh, Runtman emote. That's a classic right there. That's a classic. Those are good. Those are good. Thank you for the sub. Let's go. Okay, we gotta finish. Old man's telling us his wisdom here. You gotta listen. You gotta listen. Late in the year, we increased our ownership of the utility operation from about 92 to 100% at the cost of really roughly 3.9 billion, which 2.9 billion was paid in cash with the balance in Berkshire B shares. Let's go. All told, we recorded operating earnings of 47.4 billion in 2024. We regularly, endlessly, some of our readers may groan, emphasize this measure rather than the GAAP mandated earnings that are reported on page K68. Our measure excludes capital gains or losses on the stocks and bonds we own, whether realized or unrealized. Over time, we think it highly likely that gains will prevail. Why else would we buy these securities? That's a good philosophy. Though the year-by-year numbers will swing wildly and unpredictably, our horizon for such commitments is almost always far longer than a single year. In many, our thinking involves decades. Wow. These long-termers are purchases that sometimes make the cash register ring like church bells. These are some good one-liners. Cash register ring like church bells. What's the other one? What's the other one? Winners can blossom forever. And then what was the other one? There was another one in here. I have to go find it, but I like this one. Mistakes fade away, winners can blossom forever. There you go. Here's a breakdown of the 2023-24 earnings as we see them. All calculations are after depreciation, amortization, and income. EBITDA, a flawed favorite of Wall Street, is not for us. Not for us. Don't look at EBITDA. Insurance underwriting. Insurance investment income. I don't know what this one, BNSF, I don't know what that is. Berkshire Hathaway Energy, other controlled businesses, non-controlled businesses. Includes certain businesses in which Berkshire has been a 20 to 50% owner, such as Kraft Heinz, Occidental, and Berkadia. I tried to hold on to my Oxy. Hard time with that one. Other includes foreign currency exchange gains, approximately 1.1 billion. Nice. Surprise, surprise. An important American record is smashed. 60 years ago, wow, so another $10 billion. 60 years ago, present management took control of Berkshire. That move was a mistake, my mistake, and one that plagued us for 2 decades. Charlie, I should emphasize, spotted my obvious error immediately. Though the price I paid for Berkshire looked cheap, its business, a large northern textile operation, was headed for extinction. The U.S. Treasury, of all places, had already received silent warnings of Berkshire's destiny. In 1965, the company did not pay a dime of income tax, an embarrassment that had generally prevailed at the company for a decade. That sort of economic behavior may be understandable for glamorous startups, but it's a blinking yellow light when it happens to a vulnerable pillar of American industry. Berkshire was headed for the ash can. Fast forward 60 years and imagine the surprise at the Treasury when that same company, still operating under the name of Berkshire Hathaway, paid far more in corporate income tax than the US government had ever received from any company, even the American tech titans that commanded market values in the trillions. To be precise, Berkshire last year made 4 payments to the IRS that totaled $26.8 billion. That's about 5% of what all corporate America. Wow. In addition, we paid sizable amounts of income taxes to foreign governments and to 44 states. No, wow. That's crazy. Note, one crucial factor allowing this record-shattering payment, Berkshire shareholders during the same time, 1965 to 2024 period, received only one cash dividend. On January 3rd, 1967, we disbursed our sole payment, $101,000 or 10 cents a share. I can't remember why I suggested this action to Berkshire's board of directors. Now it seems like a bad dream. After 60 years, Berkshire shareholders endorsed continuous reinvestment, and that enabled the company to build its taxable income. Cash income tax payments to the U.S. Treasury, minuscule in the first decade, now aggregate more than $100 billion and counting. Dude's paying his tax bill. Huge numbers can be hard to visualize. Let me recast the $26.8 billion that we paid last year. If Berkshire had sent the Treasury a $1 million check every 20 minutes throughout all of 2024, visualize 366 days and nights, because 2024 was a leap year, we still would have owed the federal government a significant sum year-end. Indeed, it would be well into January before the Treasury would tell us that we could take a short breather, get some sleep, and prepare for our 2025 tax payments. Where your money is. Berkshire's equity activity is ambidextrous. In one hand, we own control of many businesses holding at least 80% of the investees' shares. Generally, we own 100%. These 189 subsidiaries have similarities to remarkable common stock, but are far more identical. The collection is worth many hundreds of billions. It includes a few rare gems, but many good but far from fabulous businesses, and some laggards that have been disappointments. We own nothing that is a major drag. We have a number that I should not have purchased. In the other hand, we have a small percentage of a dozen or so very large and very highly profitable companies with household names such as Apple, American Express, Coca-Cola, and Moody's. Many of these companies earn high returns on the net tangible equity required for their operations. At year-end, our partial ownership holdings were valued at $272 billion. Understandably, really outstanding businesses are very seldom offered in their entirety, but small fractions of these gems can be purchased Monday through Friday on Wall Street. Very occasionally, they sell at bargain prices. I like that. We are impartial in our choice of equity vehicles, investing in either variety based upon where we can best deploy your and my family's savings. Often nothing looks compelling. Very infrequently we find ourselves knee-deep in opportunities. Greg is vividly shown his ability to act at such times as did Charlie. With remarkable equities, it's easy to change course when I make a mistake. Berkshire's present size, it should be understood, diminishes this value option. We cannot come and go on a dime. Sometimes a year or more is required to establish or divest an investment. Additionally, with ownership of minority positions, we can't change management if if that action is needed, or control what is done with capital flows if we are unhappy with the decision being made. With controlled companies, we can dictate these decisions, but we have far less flexibility in the disposition of mistakes. In reality, Berkshire almost never sells controlled businesses unless we face what we believe is an unending problems. An offset is that some business owners seek out Berkshire because of our steadfast behavior. Occasionally, that can be a decided plus for us. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in remarkable equities moved downward last year from $354 billion to $272 billion, the value of our non-quoted controlled equities increased somewhat and remains far greater than the value of the marketable portfolio. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities. Mostly American equities, although many of these will have international operations of significance. Berkshire will never prefer ownership of cash equivalent assets over ownership of good businesses, whether controlled or only partially owned. Paper money can see its value evaporate if fiscal folly prevails. In some countries, this reckless practice has become habitual, and in our country's short history, the U.S. has come close to the edge. Fixed coupon bonds provide no protection against runaway currency. Businesses, as well as individuals with desired talents, however, will usually find a way to cope with monetary instability as long as their goods or services are desired by the country's citizenry. So too with personal skills. Lacking such assets as athletic excellence, a wonderful voice, medical or legal skills, or for that matter, any special talents, I have had to rely on equities throughout my life. In effect, I've depended on the success of American business, and I will continue to do so. One way or another, the sensible, better yet imaginative, deployment of savings by citizens is required to propel an ever-growing societal output of desired goods and services. This system is called capitalism. It has its faults and abuses, in certain respects more egregious now than ever, but it also can work wonders unmatched by other economic systems. America's Exhibit A, our country's progress over its mere 235 years of existence, could not have been imagined by even the most optimistic colonists in 1789, when the Constitution was adopted and the country's energies were unleashed. True, our country in its infancy sometimes borrowed abroad to supplement our own savings, but concurrently we need many Americans to consistently save, and then needed those savers or other Americans to widely deploy the capital thus made available. If America had consumed all that it produced, the country would have been spinning its wheels. The American process has not always been pretty. Our country has forever had many scoundrels and promoters who seek to take advantage of those who mistakenly trust them with their savings. But even with such malfeasance, which remains in full force today, and also much deployment of capital that eventually floundered because of brutal competition or disruptive innovation, the savings of Americans has delivered a quantity and quality of output beyond the dreams of any colonist. From a base of only 4 million people, and despite brutal internal war early on, putting one American against each other, America changed the world in the blink of a celestial eye. In a very minor way, Berkshire shareholders have participated in the American miracle by foregoing dividends, hereby electing to reinvest rather than consume. Originally, this reinvestment was tiny and almost meaningless, but over time it mushroomed, reflecting the mixture of sustained culture of savings combined with the magic of long-term compounding. Berkshire's activities now impact all corners of our country. We are not finished. Companies die for many reasons, but unlike the fate of humans, old age itself is not lethal. Berkshire today is far more youthful than it was in 1965. However, as Charlie and I have acknowledged, Berkshire would not have achieved its results in any locale except America, whereas America would have been every bit the success if it America would have been every bit the success it has been if Berkshire had never existed. So thank you, Uncle Sam. Someday your nieces and nephews at Berkshire hope to send you in even larger payments than we did in 2024. Spend it wisely. Take care of the money who, for no fault of their own, get the short straws in life. They deserve better. And never forget that we need you to maintain a stable currency, and that result requires both wisdom and vigilance on your part. That's nice. Property casualty insurance. P/C insurance continues to be Berkshire's core business. The industry follows a financial model that is rare, very rare among giant businesses. Customarily, companies incur costs of labor, materials, inventories, plant and equipment, etc., or concurrently with the sale of their products or services. Consequently, their CEOs have a good fix on knowing the cost of their product before they sell it. If the selling price is less than its cost, managers soon learn they have a problem. Hemorrhaging cash is hard to ignore. When writing property casualty insurance, we receive payment up front and much later learn what our product has cost us. Sometimes a moment of truth that is delayed as much as 30 or more years. We are still making substantial payments on asbestos exposure that occurred 50 or more years ago. This mode of operations has the desirable effect of giving property casualty insurers cash where they incur most expenses, but carries with it the risk that the company may be losing money, sometimes mountains of money, before the CEO and directors realize what is happening. Certain lines of insurance minimize this mismatch, such as crop insurance or hail damage, in which losses are quickly reported, evaluated, and paid. Other lines, however, can lead to executive shareholder bliss on the company as the company is going broke. Think coverages such as medical malpractice or product liability. In long tail lines, a property casualty insurer may report large but fictitious profits to its owners and regulators for many years, even decades. The accounting can be particularly dangerous if the CEO is an optimist or a crook. These possibilities are not fanciful. History reveals a large number of each species. In recent decades, this money up front, loss payment later model has allowed Berkshire to invest large sums, like generally delivering what we believe to be a small underwriting profit. Okay. We make estimates for surprise, and so far these estimates have been sufficient. We are not deterred by the dramatic and growing loss payments sustained by our activities. As I write this, think wildfires. It's our job to absorb these unemotionally take the lumps when surprises develop. It's our job to contest runaway verdicts, spurious litigation, and outright fraudulent behavior. Under it, our insurance operation has blossomed from an obscure Omaha-based company to a world leader, renowned for both its taste for risk and its Gibraltar-like financial strength. Moreover, Greg, our directors, and I all have a very large investment in Berkshire in relation to any compensation we receive. We do not use options or other one-sided forms of compensation. If you lose money, so do we. This approach encourages caution, but does not ensure foresight. Property casualty insurance growth is dependent on increased economic risk. No risk, no need for insurance. Think back only 135 years when the world had no autos, trucks, or airplanes. Now there are 300 million vehicles in the US alone, a massive fleet causing huge damage daily. Property damage arising from hurricanes, tornadoes, and wildfires is massive, growing, and increasingly unpredictable in their patterns and eventual costs. It'd be foolish to make that madness to write. It would be foolish make that madness to write 10-year policies for these coverages. But we believe 1-year assumptions of such risk is generally manageable. If we change our minds, we will change the contracts we offer. During my lifetime, auto insurers have generally abandoned 1-year policies and have switched to six-month variety. This change reduced float but allowed more intelligent underwriting. No private insurer has the willingness to take on the amount of risk that Berkshire can provide. At times, this advantage can be important, but we also need to shrink when prices are inadequate. We must never write inadequately priced policies in order to stay in the game. That policy is corporate suicide. Properly pricing property casualty insurance is part art, part science, and is definitely not a business for optimists. Mike Goldberg, the Berkshire executive who recruited Ajit, said it best. We want our underwriters to daily come to work nervous, but not paralyzed. All things considered, we like the property casualty insurance business. Berkshire can financially and psychologically handle extreme losses without blinking. We are also not dependent on reinsurers. That gives us a material and enduring cost advantage. Finally, we have outstanding managers, no optimists, and are particularly well suited to utilize the substantial sums of property casualty insurance delivers for investment. Over the past 2 decades, our insurance business has generated $32 billion after-tax profits and underwriting, about 33 cents per dollar of sales after income tax. Meanwhile, our float has grown from 46 billion to 171 billion. The float is likely to grow a bit more over time, and with intelligent underwriting and some luck, has a reasonable prospect of being costless. Wow. Berkshire increases its Japanese investments. A small but important exception to our US-based focus is our growing investment in Japan. It has been almost 6 years since Berkshire began purchasing shares in 5 Japanese companies that very successfully operate in a manner somewhat similar to Berkshire itself. The 5 are alphabetically Itochu, Marubeni, Mitsubishi, Midisai, and Tsutomoto. Each of these large enterprises, in turn, owns interest in a vast array of businesses, many based in Japan, but others operate throughout the world. Berkshire made its first purchases involving the 5 in July of 2029. We simply looked at their financial records and were amazed at the low prices of their stocks. As the years have passed, our admiration of these companies has consistently grown. Greg has met many times with them, and I regularly follow their progress. Both of us like our capital deployment, their management, and their attitude in respect to their investors. Each of these 5 companies increase dividends when appropriate. They repurchase their shares when it is sensible to do so, and their top managers are far less aggressive in their compensation programs than their U.S. counterparts. Our holdings of these 5 are for very long term. We are committed to supporting their boards of directors. From the start, we also agreed to keep Berkshire's holding below 10% for each company's shares, but as we approached this limit, the 5 companies agreed to moderately relax the ceiling. Over time, you'll likely see Berkshire's ownership to all 5 increase somewhat. At year-end, Berkshire's aggregate cost in dollars was $13 billion, and the market value of our holdings totaled $23.5 billion. Meanwhile, Berkshire consistently, but not pursuant to any formula, increased its yen-denominated borrowings. All are at fixed rates, no floaters. Greg and I have no view on future foreign exchange rates and therefore seek a position approximately currency neutral. We are required, however, under GAAP rules to regularly recognize in our earnings a calculation of gains or losses in the yen we have borrowed. At year end, at year end had included 2.3 billion of after-tax gains due to dollar strength, of which 850 million occurred in 2024. I expect that Greg and his eventual successor will be holding this Japanese position for many decades, and that Berkshire will find other ways to work productively with the 5 companies in the future. We would like the current math of our yen-based balance strategy as well. As I write this, the annual dividend income expected from the Japanese investments in 2025 will total about 812 million, and the interest cost on our yen-denominated debt will be about 135 million. The annual gathering in Omaha. I hope you will join us in Omaha on May 3rd. We are following a somewhat changed schedule this year, but the basics remain the same. Our goal is for you to get many of your questions answered, that you connect with friends, and you leave with a good impression of Omaha. The city looks forward to your visits. We will have much of the same group of volunteers to offer you a wide variety of Berkshire products that will lighten your wallet and brighten your day. As usual, we will open on Friday from noon to 5 p.m. with lovable squishmallows, underwear from Fruit of the Loom, Brooks running shoes, and a host of other items to tempt you. Again, we'll have only one book for sale. Last year's featured Poor Charlie's Almanac and sold out. 5,000 copies disappeared before the close of business on Saturday. This year we'll offer 60 years of Berkshire Hathaway. In 2015, we asked Carrie Sova, who among her many duties managed much of the activity at the annual meeting, to try her hand at putting together a lighthearted story of Berkshire. We gave her full rein to use her imagination. She quickly produced a book that blew me away with its ingenuity, contents, and design. Subsequently, Carrie left Berkshire to raise a family and now has 3 children. But each summer, the Berkshire office force gets together to watch Omaha Storm Chasers play baseball against a AAA opponent. I ask a few alums to join us, and Carrie usually comes with her family. At this year's event, I brazenly asked if she could do the 60th anniversary issue featuring Charlie's photos, quotes, and stories. That have seldom been made public. Sorry, chat. Kind of reading a lot here. Okay. Even with 3 young children to manage, Carrie immediately said yes. Consequently, we will have 5,000 copies of the new book available on sale Friday afternoon from 7 to 4, and then from 7 to 4 on Saturday. Carrie refused any payment for her extensive work on the new Charlie edition. I suggested she and I co-sign 20 copies to be given to any shareholder contributing $5,000 to the Stevens Center that serves homeless adults and children in South Omaha. The Kaiser family, beginning with Bill Kaiser Sr., my longtime friend and Carrie's grandfather, have over decades been assisting this worthy institution. Whatever is raised through the sale of the 20 autographed books, I will match. Nice. Becky Quick will cover our somewhat re-engineered gathering on Saturday. Becky knows Berkshire like a book and always arranges interesting interviews with managers, investors, shareholders, and the occasional celebrity. She and her CNBC crew do a great job of both transmitting our meetings worldwide and archiving much Berkshire-related material. Give our director Steve Burke credit for the archive idea. We will not have a movie this year, but rather will convene a bit earlier at 8 a.m. I will make a few introductory remarks, and then we'll probably get to Q&A, altering questions between Becky and the audience. Greg and Ajit will join me in answering questions, and we will take a half-hour break at 10:30 a.m. We reconvene at 11. Only Greg will join me on stage. This year will disband at 1 p.m., but stay open for shopping in the exhibit until 4. You can find the full details regarding the weekend activities on page 16. Not particularly the always popular Brooks Run on Sunday. I will be sleeping. My wise and good-looking sister Bertie, of whom I wrote last year, will be attending the meeting along with her 2 daughters, both good-looking as well. Observers all agree that the genes produced this dazzling result flow down only the female side of the family. Bertie is now 91 and will talk regularly on Sundays using old-fashioned telephones for communications. We cover the joys of old age and discuss such exciting topics as the relative merits of canes. In my case, the utility is limited to the avoidance of falling flat on my face. But Bertie regularly one-ups me by asserting that she enjoys an additional benefit. When a woman uses a cane, she tells me men quit hitting on her. Bertie's explanation is that the male ego is such that little old ladies with canes simply are an inappropriate target. Presently, I have no data to counter her assertions. But I have suspicions. At the meeting, I can't see much from the stage, and I would appreciate if the attendees would keep an eye on Bertie. Let me know if the cane is really doing its job. My bet is that she will be surrounded by males. For those of a certain age, the scene will bring back memories of Scarlett O'Hara and her horde of male admirers in Gone with the Wind. The Berkshire directors and I immensely enjoy having you come to Omaha, and I predict that you will have a good time and likely meet new friends. Huh. That's pretty cool. There's some good one-liners in there. You need winners, though. You need some good winners. You make mistakes, but your winners have to be bigger than your losers. Good stuff. I have to pull out the one-liners from that. I'll have to do that. Huh. I don't know, I have to think on that for a minute. Like, what's my big takeaway from that? I guess just being steadfast. Like, you just gotta be steadfast. That's kind of what we're trying to do. So, the goals for the week. Well, we need to trade the plan. We need to manage our positions. Probably gonna play hot potato with that TQQQ, sadly. But I think I'll probably put a put on. We'll see. I mean, we know what's gonna happen. Maybe it's just a nothing burger. There's no big earnings, and we're cautiously bullish. So, to be honest, I don't know what'll happen. I have no idea. We assume there's no cut, but what that's gonna do to the market, I don't know. I have no idea. Or cause Trump to go crazy and start saying stuff. I don't know. We can't really speculate on that. Focus in on our VWAP strategy. I think I need to just get up, take a break, and then kind of come back, and I'll put my short together and think about the trades that I want to do. Maybe do some scans in financials and then in communications, see if there's anything that pops up that looks interesting. I'm just looking at Meta and Google, but we'll see how that goes. I probably won't do any of those until after the Fed meeting. We'll see what happens there. I think any big stuff before Fed, probably not. We'll just kind of go with what we have and then make a plan after the Fed meeting. But I think that's kind of all I can do right now. It was good to read the letter. I think for right now I could say it was optimistic. I think there's some good lines in here about, how to focus on things, getting your winners, not believing everything they say in earnings. God, it sucks that it affects it so much, affects price so much. Just really focusing on good businesses. Yeah. So I guess I'll take that away for now. But remember, this is for educational and informational purposes only. It's not intended to be financial advice or a recommendation. Trading is risky. Do your own research. But with that, I think I'll end it for today. We went over the month. We went over the trades. Went through the winners and the losers for the week. We read Berkshire Hathaway letter. And we'll look at performers in XLC and XLF to see if there's any new trades for the week. With that, I wish you a safe and profitable trading week.